Imagine you're forced to play a high-stakes game of Monopoly. Except in this game, the rules were secretly written against you from the very start, before you were even allowed to sit at the table. For the first 250 rounds, you're not a player. You can't roll the dice. You can't pass go. You can't own property. In fact, you are property. You are a game piece, a pawn belonging to another player, and your only purpose is to make them rich, building their empire, hotels, and railroads on your back. Then, for the next 100 rounds, you're finally handed a token and allowed to play, but the rule book is still rigged. You're banned from buying property on Boardwalk and Park Place, the best neighborhoods. The bank, which is run by the other players, won't give you loans to build houses. And anytime you manage to build a little momentum, string a few properties together, the other players can invoke special, unwritten rules that apply only to you. They can send you directly to jail, confiscate your properties, and force you to start all over again with nothing. How can you win that game? You can't. It's not a game of chance or skill. It's fixed. This isn't a game. This is a story of how America built its black poverty machine. This wasn't a bug in the system, an unfortunate glitch. It was the system itself. This wasn't a series of unlucky breaks or personal failures, but the careful, deliberate construction of a powerful economic engine designed over centuries with massive, interlocking gears of policy, violence, and exclusion, all meticulously calibrated for one specific output: a racial wealth gap so vast it's hard to wrap your head around. Today, the median net worth of a white family in America is staggering compared to a black family's. According to the Federal Reserve's most recent data from 2022, the typical white household held $285,000 in wealth. The typical black household, just $44,900. That's a gap of over $240,000. It's like one player has a stack of cash and a board full of hotels, while the other has a few crumpled bills. For every dollar wealth a white family has, a black family is just under 16 cents. This isn't the result of a few bad decades. It is a calculated end product of a machine that's been running for 400 years. To understand poverty in black America today, we have to stop looking for faults in the player and start looking at the blueprints of the game itself. Every machine needs a power source. America's economic machine, in its early days, was powered by the brutal efficiency of chattel slavery. For 246 years, black people weren't just shut out of the economic game. They were the game's fuel. They were the capital, the living assets in ledger books, the human collateral for loans. They were the engine of fortunes built on cotton, tobacco, and sugar. By 1860, the monetary value of the 4 million enslaved people in the U.S. was worth more than all the nation's factories, railroads, and banks combined. It was the single largest financial asset in the entire American economy. This system didn't just deny black people wages for their work. It was an economic black hole, systematically extracting the value of their labor, their families, and their futures to create immense wealth for others. The starting whistle blew, but one group was chained to the starting block, forced to carry the other runners on their shoulders down the track. Then came the Civil War and a promise: emancipation. For a brief, flickering moment during Reconstruction, it seemed like the machine might be dismantled. The most famous promise of this era was 40 acres and a mule. In 1865, General William T. Sherman's Special Field Order No. 15 set aside 400,000 acres of coastal land for the exclusive settlement of formerly enslaved families. This wasn't a handout. It was a player's long overdue starting capital. It was a vision for economic justice, an acknowledgement that after centuries of unpaid labor, you couldn't just say you're free and expect a fair outcome. Land ownership was the primary foundation of American wealth. Granting this land would have given black families the one thing they needed most: an asset, a starting point to finally play the game. The promise was shattered in less than a year. After Lincoln's assassination, President Andrew Johnson, a sympathizer to the Southern planter class, acted like a casino boss, changing the rules mid-hand. He overturned Sherman's order and returned the land to former Confederates. The 40,000 or so freedmen who had started new lives were evicted, often by the very men who had once enslaved them. The dream of 40 acres and a mule died, and with it, the most significant chance Black America had for an economic foothold. This betrayal was compounded by another disaster, the collapse of Freedmen's Savings Bank. Chartered in 1865, the bank was meant to be a secure vault for the first generation of Black savers. Tens of thousands of Black individuals and organizations, with incredible faith, entrusted their life savings to it. But the bank's white trustees ran it like their own private slush fund, engaging in rampant mismanagement and fraud. When it failed in 1874, it was like the game's official banker had simply stolen all of one player's money. The entire accumulated capital of a generation was wiped out, the equivalent of tens of millions of dollars today. The failure bred a deep, justifiable mistrust of financial institutions that would echo for generations. With the door to land ownership slammed shut and their savings vaporized, most Black people in the South had no choice but to return to the plantations. This gave rise to sharecropping, a new gear in the poverty machine that was like slavery with extra steps. White landowners would lease land to a Black family for a huge shared crop, often 50% or more. The landowner also controlled the company's store, selling seeds and food on credit at insane interest rates. It was like being forced to run on a treadmill. You were always working, always sweating, but you never moved an inch forward. At the end of the year, the sharecropper almost always ended up with nothing, or worse, deeper in debt. It was a closed loop of debt peonage, perfectly designed to ensure a permanent, cheap labor force. The machine was now fully recalibrated for a post-slavery world. As America entered the 20th century, the Black poverty machine was about to get a series of powerful, nationwide upgrades. These weren't just local customs anymore. These were federal policies and institutionalized practices that would systematically block Black wealth creation on a national scale. First, there was the brutal operating system of the South. Jim Crow. This was more than separate water fountains. It was a comprehensive system of economic terror, like a malicious software code running in the background of society. It was a web of laws and violent customs that locked Black people out of skilled jobs, confining them to menial labor. The unwritten rule was last hired, first fired. Any Black person who achieved a bit of economic success, a thriving business, productive land, was seen as a threat and became a target. The massacres in places like Wilmington in 1898 and Tulsa in 1921 weren't random riots. They were acts of economic ethnic cleansing, like a furious player flipping the entire game board over because you were starting to win. Prosperous Black Wall Streets were burned to the ground, their accumulated wealth destroyed, sending a chilling message. Black success will be met with violence. When the Great Depression hit, it was a catastrophe for everyone, but an apocalypse for Black America. While the national unemployment rate hit 25%, for Black Americans it was 50% or higher. In came FDR's New Deal, a lifeline for many Americans that helped build the modern middle class. But for Black Americans, it was often a raw deal. To pass his legislation, FDR needed the votes of powerful Southern segregationists, and he consistently sacrificed Black interests to get them. As a result, most New Deal programs were built with discriminatory loopholes. The Agricultural Adjustment Act sent relief checks to white landowners, who were supposed to share them with their Black sharecroppers. They rarely did, instead evicting over 100,000 Black families. The Social Security Act of 1935, the bedrock of our social safety net, was like weaving a massive safety net, but deliberately cutting a giant hole in it. It explicitly excluded agricultural and domestic workers, the two sectors where over 60% of Black Americans worked. This single decision denied millions access to unemployment insurance and old age pensions, benefits that became a foundation of economic security for white families. Of all the 20th century gears, none was more powerful than the one that denied access to homeownership, the single greatest engine for building wealth for the average American family. In the 1930s, the federal government got into the business of making homeownership accessible, but it did so by deliberately excluding Black people. This was the birth of redlining. The government became a national real estate appraiser, creating color-coded maps of every city. Neighborhoods were graded through D. Green A neighborhoods were deemed lowest risk, or almost exclusively new, all-white suburbs. Red D neighborhoods were labeled hazardous. The government's own manuals were shockingly explicit. The presence of even one black family was enough to downgrade a neighborhood to red. The Federal Housing Administration, FHA, would then refuse to insure mortgages in these redline communities. No insurance meant no bank loans. This policy starved black communities of capital, making it nearly impossible to buy a home or even get a loan to fix a leaky roof. At the exact same time, the FHA was using taxpayer money to subsidize the construction of massive new suburbs like Levittown on the explicit condition that the homes be sold only to white people. The government was acting as an architect of inequality, simultaneously building the white middle class while drawing a red line around black communities, trapping them in declining urban centers and cutting them off from the most important path to wealth. The long-term effects are still with us. Studies show homeowners in formerly redline neighborhoods have gained significantly less in home equity than those in non-redline areas. After World War II, the GI Bill was a jackpot of opportunity, rewarding returning veterans with college tuition, low-interest home loans, and business loans. It's credited with creating the modern American middle class, a middle class that was, by design, overwhelmingly white. Over 1.2 million black soldiers served honorably, yet they were systematically denied these benefits. The law was administered locally, often by an all-white Veterans Administration. It was like a national lottery where black veterans were told their tickets were valid, but the prize booths in their neighborhoods were always mysteriously closed. In the Jim Crow South, and in many parts of the North, their applications were denied. The home loans were useless because of redlining. Black veterans who wanted to go to college found that the few historically black colleges were overwhelmed, and white universities wouldn't admit them. Of the first 67,000 mortgages insured by the GI Bill in the New York suburbs, fewer than 100 were for non-white veterans. The GI Bill became another devastating missed opportunity, widening the very wealth gap it could have helped close. By the late 1960s, the civil rights movement made legal exclusion harder. The Fair Housing Act of 1968 outlawed redlining, but the machine didn't break down. It adapted. Its programming was updated from blunt force to surgical precision. It shifted from total exclusion to a more insidious strategy, predatory inclusion. Now that it was illegal to refuse to lend, speculators moved in. This was like a mousetrap baited with the cheese of opportunity. Instead of being denied credit, black families were targeted for the most exploitative loans imaginable. In cities like Chicago, families unable to get a traditional mortgage were offered contracts for houses at inflated prices. They made payments but built no equity, like tenants. If they missed one payment, the trap would spring. They could be evicted, losing everything. This predatory model hit its peak in the run-up to the 2008 financial crisis. Loan officers specifically targeted black and Latino neighborhoods with toxic subprime mortgages, knowing they were financial time bombs. Studies found that high-income black borrowers were twice as likely to receive a subprime loan as low-income white borrowers. It was reverse redlining. When the market crashed, a wave of foreclosures disproportionately wiped out black wealth, in what became the single largest destruction of wealth for communities of color in modern history. The machine had been perfected. For 100 years, it worked by locking black people out. Now, it had been upgraded to work by letting them in, but only on terms designed to strip away their wealth. After centuries of design and upgrades, the machine is running at peak efficiency. Its output is all around us, in the stark numbers that define American life. These aren't just statistics. They are the unavoidable end product of a system built by design. The clearest measure of the machine's success is the racial wealth gap. Wealth is an income. It's what you own minus what you owe. It's your family's economic immune system. It's the safety net that protects you from emergency and the foundation for opportunity. As of 2022, the typical white household has a net worth of $285,000. The typical black household has just $44,900. That's not a gap, it's a canyon. It's the difference between having a fully stocked emergency bunker for a hurricane versus a leaky umbrella. That gap is a direct legacy of policies that promoted white wealth while destroying black wealth. In fact, even though black wealth grew between 2019 and 2022, the dollar gap between white and black households actually increased by nearly $50,000. The main driver of the wealth gap is a gap in homeownership. In 2023, the homeownership rate for white Americans was over 72%, while for black Americans, it was just under 45%. Shockingly, that gap is about as wide today as it was in 1968 when the Fair Housing Act was passed. It's like we've been in a 50-year race toward equality, but one runner has unknowingly been on a moving walkway going backward. This is a direct result of redlining and discriminatory loan practices that persist today. Even in 2023, black mortgage applicants were denied loans at nearly double the rate of white applicants. What about education? The data shows it's not the great equalizer we think it is. In 2023, the median income for a white household was about $84,600. For a black household, it was just over $56,400, meaning black households earn only about 67 cents for every dollar earned by white households. A black college graduate is like a climber on the corporate ladder who is forced to wear a weighted vest. They have to work twice as hard just to keep up with their white counterparts. And the old last hired, first fired rule is still grimly intact. During recessions, black unemployment consistently spikes to double the rate of white unemployment. The machine doesn't just block wealth. It actively imposes debt. This is clearest with student loans. Because black families have less generational wealth to pay for college, black students are forced to take on far more debt. It's a financial anchor they have to drag with them from day one. They start their careers not at the starting line, but 100 yards behind it, trying to catch up while shackled by debt, making it exponentially harder to save, buy a home, and build wealth. What about starting a business? Here, too, the machine erects barriers. The biggest hurdle is capital. Black business owners are denied credit at nearly twice the rate of white owners. Imagine trying to grow a garden. One study found the average black-owned startup received just $500 in outside investor funding, barely enough for a few seeds. The average white-owned startup received $18,500, enough for seeds, soil, and fertilizer. This is a direct consequence of the wealth gap. Most entrepreneurs rely on personal and family wealth to get started, a resource that is far less available in the black community. We've traced the blueprints, examined the gears, and measured the output, from the slavery-era engine that used humans as fuel to the sabotage of Reconstruction that stole the starter capital. From Jim Crow's economic warfare to a New Deal that wove a safety net full of holes. From the red lines that segregated the country to a GI Bill that handed a jackpot of opportunity to white veterans while shutting black veterans out. And finally, to the modern gears of predatory lending that turned the dream of ownership into a nightmare of debt. Each of these was a conscious choice, a policy enacted, a law enforced, a system built. The result is a machine we see today, humming along, producing the same racial disparities year after year. To argue that these gaps are the result of personal choices or a lack of ambition is a profound misreading of history. It's blaming the player for losing a game that was rigged from the start. It asks us to ignore the blueprints, to pretend the machine doesn't exist. So where does that leave us? Acknowledging the machine isn't about assigning guilt. It's about demanding an accurate diagnosis of the problem so we can find real solutions. It will require policies as bold and intentional as the ones that built the machine in the first place. But the first step is understanding. Understanding that what we see today is not an accident. It is a product of meticulous, centuries-long design. We can't dismantle an engine we refuse to see. We have to see the machine for what it is, study its mechanics, and call it by its name. And now, after walking through the gears of this machine, I want to leave you with one question. What do we do next? If the poverty machine was carefully built, then it can also be carefully dismantled. But only if we recognize it, challenge it, and refuse to let history repeat itself. The conversation doesn't end here. It begins with you. Do you believe America can ever truly break this cycle, or has the machine simply been upgraded for a new era? Drop your thoughts in the comments below. I read every one. If this story opened your eyes, hit that like button, share this video, and make sure you subscribe so you don't miss the next deep dive. From my heart, thank you for being part of this family. Your support means everything. Together, we are not just watching history, we are rewriting the narrative,